Welcome to Bunnex Investment Group. By the end of this video, you should be able to analyze any particular pair in less than a minute, catch reversal points with high accuracy, trade the right M's and W's. I'm sure at one point you have been trapped whereby you tried to trade an M or a W, later to see it was a fake. So be sure to stick up to the end for you to fully comprehend the whole strategy. Firstly, we need to talk about the TDI, as it is the part that is going to play most of the action. There are hundreds of videos on YouTube about this indicator, but most of them are misleading. Firstly, this is a free indicator. No one should sell this to you. I can give you for free. You can simply communicate with me via Telegram using the link that is in the description box below, and I'll provide you from mobile, MT5, MT4. So you can even construct using other default indicators, because it's actually a bunch of EMAs, a bunch of that includes Bollinger Bands and so forth. So the Traders Dynamic Index measures volatility and sentiment at the same time. In my case, I call this a special indicator. Most important component of this indicator is the relative strength index, or basically RSI line, which measure whether a currency is strengthening or weakening in terms of its relative strength. Below is the structure of this indicator. So for those who haven't seen it, this is how it looks like. You can even change all these colors to make them your choice. We have these bands in blue. We call them the volatility bands, and they are actually derived from the Bollinger Bands. So these bands are actually a guide or a bound for us to see whether a currency is within or is outside. Then this green line, as I've said earlier, it is the most important part, and it is the RSI line. And we have this EMA in red. It's basically a signal line. The one in yellow is a moving 50. So the most important thing that we are going to need within this strategy is to see what we call a shark fin, right? A shark fin is basically a nickname that is given when the market actually peers outside these bands and then goes back within the bands. So the moment that we see the RSI line goes out of the bands, we start or we get ready for an entry, is how we are going to explain shortly. Right? So our strategy will require two time frames. We are going to need two time frames of observation. These are the H4 and the H1 time frame. The H4 will be used to attain buyers. Where is the market going? Where are we going to look for? Or basically, it's going to give us the direction of the market. And the H1 is to confirm and make our entry. So the TDI we have just talked about will be seen on the H4 time frame. Let's have a pictorial explanation of this concept. So basically, we are saying the first step is to see an H4 shark fin. If we see the market piercing outside the bands, as I've showed you just a minute ago, we prepare ourselves, right? So in this case, we are illustrating that we need to see an H4 shark fin, and this will be on the H4 view. The second thing is we need to see H1 giving us an M or a W pattern with 3 days of flow. So at the point of shark fin on the H4 time frame, if we switch to the H1 view, we need to see a W pattern. The next check is to see whether that W pattern is occurred after there has been 3 days of rise or 3 days of drop. At this particular point, that is when we start to prepare ourselves to enter. I understand this might be a little bit confusing. Don't worry, we are going to the practical examples on real markets. So before we see examples, please note we are going to have a 5-day live bootcamp from the 21st to the 25th of August 2023. We'll be covering the new institutional market maker method, as they have evolved and they have changed several things. That is what we're talking about, the new entries, basically the whole approach to the markets using the new institutional market maker method. Secure your seat for $100. See more details in the description box. I've left the link there. All right, so we are now on the charts. This is H4 time frame on Euro USD. The TDI indicator is right here on the bottom part, and we want to look for the first confluence of what we just talked about. We've said we need to see these shark fins, right? So I'm just going to first mark the shark fins. You can see the market went outside the bands, but we are saying when the market comes back within the bands, it's already late for us to make an entry. So as soon as it goes outside the bands, we now go to the H1 time frame. So let's actually mark them so that you can see if those points actually presented the M's and W's that we have been waiting for. So as you've seen first on the first part of this video, we said you are going to analyze several pairs with less than a minute. That is a point whereby you'll be just looking for shark fins on the H4 time frame. Those without H4 time frame for the period that you want to trade, you are just skipping several pairs, checking for the H4 shark fins, and then later to check for the M's and W's on the H1 with 3 days prior to their occurrence. So in this particular case, we had this shark fin, right? Another shark fin that was given here on the H4. We can see the market piercing outside the bands. Then going again, we can see another shark fin here on the H4 time frame, right? There are several of them. Another shark fin. We had another one here. So I'm just going to mark them randomly so that we won't have a very a long tedious video, right? Another shark fin. Another shark fin. So all these points we had shark fins. So let's now go on the H1 time frame to see the pattern that we will be looking for. In this particular case, we said we want an M pattern that comes prior to 3 days. In this case, we had day 1, day 2 to this particular point, and there was no proper pattern, right? In this particular case, we also did not have enough number of days, but at this particular point, we had a very good pattern that we always want to get. It was actually a properly formed W pattern that came after 3 days of drop to the downside, and there was a candlestick reversal pattern, which was a bullish engulfing pattern, and we were going to make an entry. As we make an entry using this particular strategy, we are looking for 100 to 150 pips of holding that particular pair, and from that point probably we're going to exit at this point or that point. Then here, although we had a W pattern, we did not have 3 days prior to formation of this W pattern, so it was not proper. This, we had a very beautiful M pattern, or we can as well say it's a special type of an M pattern, which is a head and shoulders pattern, shoulder, head, and we were going to make an entry. So after, there was actually 3 days prior to its formation, and going further, we can see there was a beautiful M pattern after 3 days, 1, 2, and 3. So basically, we are saying look for H4 shark fins, go to H1 at the point whereby the market has pierced outside the bands on the H4 time frame. Look for an M or a W pattern, enter a candlestick reversal pattern of the anticipated second leg, and you are done. You can swing, you can day trade, it all depends on your choice. Basically, that is what we had. See you on the free Telegram. Have a beautiful day.